And welcome back to Chosen Generation Radio. My guest, Rick Manning, Americans for Limited Government, and David Soderberg, a free enterprise project, a project of the National Center for Public Policy Research. You know, the bottom line, this cancel culture, this woke culture is impacting the bottom line for retirement funds for millions and millions of Americans. Rick, talk to us about some of the specifics as it relates to that, and then we'll get Davis's input on this.
Sure. We've seen over the last week and a half the effect of woke capitalism when Twitter and Facebook went against their own shareholder interests by banning President Trump off their platforms, costing at least Twitter significantly more than 10% of the value of the company. And shareholders of Twitter don't buy Twitter because they want to get involved in Twitter policy. What they buy Twitter for is because they want to make a profit. Is the whole reason you buy a stock is because you want to make a profit. And if the corporate woke policy ends up costing you that profit, it seems to me that the company has broken faith with their owners, who are the shareholders. Davis, I know you do a lot of this shareholder activism, and you see how woke capitalism hurts companies focus on shareholder interests. Tell me, what are you doing? What are you guys doing to deal with that?
So, Rick, your point about Twitter is it is such a perfect example of what we're seeing with woke capitalism and its effect on shareholder value and just the markets in general. So, what we do at the National Center is, like you said, we're shareholder activists. So we educate shareholders about the movement of woke capitalism, and we do research on the directors and the movements they're going, the CEOs, and all of the things that they're trying to do with ESG policies to push their organizations further and further to the left, rather than focusing on what should be their main priority, the shareholder interest. And we have a bunch of shareholder meetings with companies. I have one with Costco later today, and we confront them with questions about this whole situation of not focusing purely on the shareholder. Because when you move away from that and you start getting into this wokeism, then things happen exactly like what we're seeing with Twitter, which you just mentioned. And we are becoming one of the few that is still pushing for the shareholder movement. And it's really concerning, but we're doing our best to counter it. And I think people need to take a step back, and they need to understand that the shareholder interest is what drives the economy. And that's what corporations need to focus on.
Well, I'm looking at these numbers. I'm just going to say real quick, and I'll throw it right back to you. But Newsmax is saying $51.2 billion in combined losses for Facebook and Twitter over 2 days of trading, and this is dated January 13th. Go, Rick, close us out.
Yeah, let me make clear, $51 billion is not money that came out of Facebook's profit, not out of Facebook or Twitter. It's out of a shareholder's pocket. The people who invested in those companies long term lost a total of $51 billion over the course of the last couple of weeks. And that is $51 billion that got burned up at the stake at the altar of woke capitalism.
That's spot on. That is spot on.
And that is actionable on the part, perhaps, or it would seem actionable on the part of stockholders, since both Twitter and Facebook knew that their actions were going to take a derogatory turn with regards to the value of those stocks, and fiduciary responsibility dictates how they're to respond to that.
At the end of the day,